Everyone has to live somewhere, and everyone has to invest their money someplace. So what happens when where you live meets up with where your money is invested? Hello, real estate. Hey, welcome back to Big Money Real Estate. I'm Elise Blank. Here's your daily update. So I've talked a lot lately about alternative credit scoring models, mostly because otherwise qualified buyers are being frozen out of the housing market. Thin credit histories are just not really working well with the major credit reporting bureaus, not to mention the super strict lending standards that we're currently seeing for mortgages, although there is some pressure in Washington, D.C. to calm that down. Not a lot is changing for people who are on the fringes, who don't fit right into those boxes that the GSEs really want you to be in. So I'm going to continue that conversation today with my guest and really good friend, Steve Ely. Steve is the CEO at eCredable, which, just to be perfectly open and transparent about it, I sit on a board of advisors for them. I've been an investor in this company. That's a credit reporting agency, a CRA, that uses alternative data like bill payments to help consumers build their credit histories. And their marketplace also has different loan companies that will help you get an auto loan, help you get a mortgage. They just added a new one. We'll find out all about that and more. Steve, welcome back to Big Money Real Estate.
Hey, Elise, thanks. It's great to see you again.
It's great to see you. So the number of unbanked and underbanked consumers is estimated at nearly 70 million, more than a quarter of U.S. households. What's your take on whether those consumers are going to be able to jump into what we would call the mainstream financial markets?
Well, a certain number of them will be able to. The way that we look at the marketplace, we kind of look at that whole underserved, underbanked market and kind of put them in two different categories. You have to think like a creditor for a minute, and creditor looks at those people as people that have no credit history whatsoever, so they're a little bit invisible when it comes to applying a credit scoring model, traditional credit scoring model to that kind of consumer. And then you have people that just have a little bit of credit, but it's really not enough to generate a meaningful credit score to make a credit decision from. And the problem those people have, as you probably know, is if you go online and apply for any kind of credit, the online system is very likely going to rely very heavily on your credit score to make that decision. So that's going to prohibit a lot of those people from participating in the mainstream financial system.
All right, so what is eCredable doing, just to remind all of our viewers, to kind of fill that gap?
Yeah, so there's this concept of alternative data, which leads to alternative credit. And that's what we do. We're a credit bureau, just like Equifax, Experian, and TransUnion. But the difference is we focus exclusively on the consumer. And so the consumer will come to eCredable, and we'll work with them to understand who are they making all their regular bill payments to for bills like rent, utilities, and insurance. We verify the information on behalf of the consumer. We look at the prior 24 months of payment history. We create a credit report. We apply our credit score to it. And that allows us to connect that consumer to a lender that uses our credit score as part of their underwriting process. That effectively means that that consumer doesn't have to have a traditional credit history in order to be approved for credit products necessarily. It would certainly be easier. There'd be more selection available to the consumer, but it's not a minimum requirement any longer.
You know, what I'm seeing online now are lots of startups using social media profiles and other publicly available information to help companies assess credit risk for people and even for businesses who either don't have a credit history, have a thin credit file. Companies are even using Yelp reviews for small business applicants or LinkedIn for students graduating with a lot of debt. I saw that written actually in USA Today. Companies are using rental data, and I know that eCredable is using utilities. Let's talk through and start with the social media stuff, because I think that's really interesting, but I can't think that that's a viable business model for anybody who's trying to qualify people to get mortgages with GSEs. So yeah. Are we going to see social media be the next step for people who don't have credit histories to kind of get credit histories?
So I think you'll see variations of it. One of the challenges that a lender in the United States has is that you have to meet regulatory requirements that are typically state by state. Some are federal, most are state by state. And so when you do that, you have to deal with regulators who are monitoring exactly how you set up your lending criteria. Well, if you go to a regulator and say, we made lending decisions based upon somebody's social media status, I think you'd be in hot water. I don't know of any regulator today that would sign up for allowing anyone to use that kind of data to make a risk decision. And so what you see happening with social media is not people using it for risk decisioning per se, making a credit decision, but rather using it for marketing. In other words, could I use social media as a way to filter out certain people that probably aren't going to meet my credit underwriting criteria, and then use other data when I find that consumer to make a credit decision, traditional data, for example, that might be available about that consumer. So I think that's what you'll see for the foreseeable future, is a little bit of a hybrid in the marketplace that's a mix between marketing, let's find that consumer, and then traditional data to underwrite risk for the consumer.
So if we're not going to use social media anytime soon, let's talk about some of the sources of alternative data that we are able to use and that eCredable is using. I know that you use public records, rental data, payday information, utilities and telecom information, employment, banking information. What else? How does that all factor into what you're doing versus what Experian, Equifax, and TransUnion are doing?
Yeah, so the concept of alternative data is a pretty broad concept, but generally speaking, people would describe alternative data as any data that is not typically reported to the national credit bureaus. And so typically is a strong word because the bureaus are all a little bit different. For example, Experian and TransUnion, they have rental payment data in their files. So they're able to use that as part of their decisioning process. Equifax has utility data in a file of theirs that they're not using as part of a traditional credit score, but as an alternative credit score in conjunction they're doing and work that they're doing with FICO and with LexisNexis. And so what eCredable focuses on is information that we can actually verify easily to prove the consumer's creditworthy. And so we use rent, utilities, insurance. We can use childcare, alimony, remittances, anything that the consumer can say to us, hey, here's a company that I'm making a regular payment to, and we can contact that company on behalf of the consumer and verify that payment history, because that's the way that our model works. Our model typically evolves around information that's not sitting in a national database, so you just can't go get it with a click of a button. Someone has to do some manual labor to go get the information, and that's what we do on behalf of the consumer. And so if you look at this other alternative data that LexisNexis, Equifax, that the other bureaus are actually using today, they're kind of dabbling in different sources of information that allow them to complement their traditional credit scores. Today, there is almost nobody that's storing this kind of alternative data in the core credit file, which would affect the consumer's FICO score, their classic FICO score, whether that's FICO 8 or FICO 9, or even a Vantage score. And so over time, that may come to pass, but today nobody's able to do that. These are different data sets. And so what's the problem for the consumer that creates? Is that you as a consumer, if you go to Equifax.com and try to get your credit report, you're not going to see this other information in your credit file. It's going to be kept in separate databases. So the consumer's at a slight disadvantage there because the system is not as transparent as consumers would like it to be.
So when you're thinking about how it's all going to work for eCredable and consumers, first of all, we should say that eCredable has free accounts. You literally can go in, sign in, and enter in, self-report all of your payments, and there's no cost until you go to get something verified. Is that right? Yeah,
that's correct. We're a completely free model until the point in time when the consumer wants to apply for credit, and then they give us permission to do the verification work for them so they can go apply for the credit.
And how many different companies are in the eCredable marketplace, for example?
Yeah, we have an online marketplace today with about a dozen companies in there, but most of them are pretty small. What we're doing is working on adding some bigger national brands so the consumer has more choice. But we do have a couple of really good mortgage companies in there. One of them is a company that we've had a long time called Churchill Mortgage, and a consumer can use our credit score to go apply for a home loan at Churchill Mortgage. A recent addition to our marketplace is a new partnership with a mortgage broker out on the West Coast called South Pacific Financial Corporation. And South Pacific will use our credit report and credit score to allow a consumer to apply for an FHA home loan. And so that means a consumer without any credit history whatsoever could come to eCredable and earn the appropriate credit score in our system. We call it a credit rating. We rate people on a scale of A through F. So anyone that earns an A could go to South Pacific Financial Corporation and apply for an FHA home loan.
Which would be just great because then you'd actually be able to go buy a house as opposed to not buying a house.
Exactly.
Steve, thanks so much. Any final thoughts on how you think this will all shake out with alternate data?
Yeah, I think it's going to get bigger and bigger because what's happening now is that more and more large institutions are doing pilots with this kind of data. 5 years ago, people were just kind of looking at it, but now people are actually doing some real work with it. So I think over the next 5 years, you'll see this kind of information go mainstream with a lot of the largest financial institutions in the country, and that'll provide more choice for consumers and allow more consumers to participate in the mainstream financial system and frankly avoid some of the alternative financial providers like payday lenders.
Which is really great. Steve Ely is the CEO at eCredable.com. If you want more information or you want to sign up for a free account, you can go to eCredable.com today. Hey, thanks, Steve.
Thanks, Elise. See you later.
See you later. And thank you for watching this episode of Big Money Real Estate. If you have questions about building or rehabilitating your credit history, you can send them to me on Twitter and Facebook. And be sure to share this video with everybody you know. Until next time, I'm Elise Klink.